Ever wondered why some people are terrified of mortgage loans? Could it be because of the common myths that surround it? Welcome to the maze of mortgage myths, where fear and misunderstanding often cloud what should be a clear path to homeownership. It's a labyrinth filled with tales of perfect credit scores and hefty down payments, whispers of fixed-rate loans being the only safe choice, and more. These myths, while they may seem daunting, are often just that, myths. They're the shadows on the walls of the maze, making it seem more complicated and frightening than it truly is. They can deter potential homeowners, causing them to lose out on opportunities or even make financially risky decisions. But fear not, for we are here to shed light on these misconceptions, to guide you through the twists and turns of this mortgage myths maze. Stay tuned as we unravel the truth behind these misconceptions. First off, the myth that you need a perfect credit score to get a mortgage loan. Does it sound familiar? Let's dive into this misconception. Many people believe that a flawless credit score is a golden ticket to securing a mortgage. While it's true that a high credit score can open doors to favorable interest rates, it's not the end-all be-all. Lenders look beyond just the credit score. They are interested in your overall financial picture. This includes your income, your employment stability, and your debt-to-income ratio, which is how much you owe compared to how much you earn. A healthy balance in these areas can still win you a mortgage approval, even if your credit score isn't perfect. Remember, a credit score is just one piece of the puzzle. So, don't be discouraged if your credit score isn't hitting the ceiling. Instead, focus on maintaining a balanced financial profile. So, no, you don't need a perfect score. What you need is a balanced financial profile. Next up, the 20% down payment myth. Does it ring a bell? You've probably heard this one before. Many believe that you must have a whopping 20% of a home's purchase price saved up to secure a mortgage. Sure, a 20% down payment can lower your loan amount and potentially your interest rates. But here's the catch. It's not a strict requirement. There's a buffet of options available that require much less. Take FHA loans, for instance. These government-backed loans only require a down payment as low as 3.5%. The trade-off, though, is that you'll have to pay an upfront and ongoing mortgage insurance premium. But remember, it's all about what works for you and your financial situation. It's crucial to weigh the pros and cons and consult with a mortgage professional. So no, a 20% down payment isn't a must. What you need is a plan that fits your financial situation. And finally, the myth that fixed-rate loans are always the best. Have you heard this one before? This myth is circulated because fixed-rate loans offer stability. The interest rate and monthly payments are set in stone from the get-go, offering a sense of predictability. However, they might not always be the best option for everyone. Let's consider adjustable-rate mortgages, or ARMs. These are loans where the interest rate can change over time based on market conditions. While they might seem risky, they can actually be beneficial under certain circumstances. For instance, if you're planning to sell the house in a few years, you could potentially save with an ARM thanks to its typically lower initial rates. Moreover, if interest rates are high at the time of purchase, an ARM could offer the potential for lower payments in the future when rates drop. So no, fixed-rate loans aren't always the best. What you need is a loan structure that aligns with your financial goals. So, we've debunked some common myths about mortgage loans today. We've navigated through the mortgage myths maze and shone a light on the truth. We've seen that you don't need a perfect credit score to secure a mortgage loan. A less-than-perfect score can still get you a good deal. We've also shattered the myth that you need to make a 20% down payment. There are many loan options that require far less. And finally, we've revealed that fixed-rate loans are not always the best option. Adjustable-rate loans can sometimes offer a more favorable deal. Remember, these are just myths. The reality is far more nuanced and filled with opportunities. Making informed decisions requires understanding the ins and outs of mortgage loans. Don't let misconceptions guide you. Instead, seek out reliable information and advice. Remember, knowledge is power, especially when it comes to financial matters. Stay informed, stay ahead.